Good morning, good morning, good morning. This is Minash Patel from IMTF Trade. Today I want to show you another example of how easy it is to trade. Stop getting things complicated, stop paying for services and everything, and come and check this out. This is so easy. We're going to take Honeywell. Had earnings today. So it's kind of a little tricky because they had earnings at the beginning of the month. It's kind of not like January seasonality. It's not a February seasonality. So you kind of have a little pre-earnings on January and post-earnings for February. Okay, here's alerttrades.com. Come check it out. Sign up for free. No cost whatsoever. No data feeds either. There's free completely. Why? We make so much money on this every day in trading. Why do we even need to charge people and to sit there and go for support services and all that stuff? So that's why it's free. So we typed in Honeywell here at the top. We went to January. We clicked on January here. There's January. 82% probability of going up. That's exactly what we look for. We want the SIV to be 10 or higher, but in this case it's right at the borderline condition. That's no problem. But what I did was I took it one step further since it's a boundary condition. February, 80% probability of going up too. So this is 9.9%. So between the January and February, we know it's bullish. And then we look here at March. And if you look at March, this kind of has a pattern almost going. Two up, two down, and it could possibly be another 2019 and 2020 going down. So this is possibly a 3-month trend minimum, right, that we're looking at. So we're going to look at this at a long-term basis, and we start looking into this at the beginning of January. So let's go to our technical charts and go from there. Now, we're going into a monthly time frame. Reason why is we're looking for that trend to last 3 months at least. And also due to everything that happened in December with the markets drastically going down. And we knew based on seasonality, markets had a high probability of bottoming out sometime in December and going up into January and also possibly into February, late February at least. So what we're doing was we went to a monthly time frame and looked at Honeywell. And here's Honeywell. Notice one thing. It's been respecting this green line here since 2011, yet to break down at all. Okay, you could see here back in December, it looked like it closed below it. However, it didn't. You look at the flat parts of the green line. The flat part of the green line was right there, and it held it right there. This showed this was a buying opportunity at the end of December. So we waited to the end of December, watched it closed. And then what happened was in January, we started looking for some signals to go up. And that's exactly what we started doing. Now, this is a higher time frame. So this was confirming that this is a great buying opportunity because look at here. Every time it touched that green line, it was a great buying opportunity. The problem was we did not want to go for any drawdown. And you could see if we bought right away here, we could have gone for that drawdown. So what we do is we go for a confirmation by looking for trades on a 60-minute. And that's exactly what we're going to do. So in January, we started looking for some trades on a 60-minute. Notice one thing. January, we got a bullish setup here with this green. It never triggered the breakout dots at all. We're not doing pullback at all. Reason why is that it still could go for a drawdown. We want a high probability trade. Boom. Right here, January 7th, basically our trade, January 7th here at 11:30 Eastern Standard Time, our trade triggered. We entered the trade at 135.38. You can see we rode this thing all the way up. Now you can barely see it. We have overextension dots right there. So it told us to tighten up our stop, and basically we got out at 141.52. We got out of there. Then basically we waited for another bullish setup. We got it here, right there, which is basically at the end of January right there. And you could see pretty much we entered this trade here at 143.33 going to earnings. You could see the pop this morning. Doesn't seem like it's holding yet. It looks a little deceiving. Reason why is we're still in the first half an hour of the trading market. But you could see here we're already up drastically on our options because we bought them cheap. And you could see it's at 148 at this most high right there, and you kind of have to see exactly where it's going to go. So you could see there's two trades here that we easily made money. It all started with alert trades. You could see that we basically, with the seasonality, earnings, gap, and technicals. We combined them there to sit there and take a really, really good reward risk ratio on this trade. And you could see we walked away drastically with a huge reward risk ratio on Honeywell. That's how easy it could be without you paying for anything. If you have any questions, you could sign up email us at info@eiicapital.com. Thank you and have a good day.